Did you know that in the last decade, Bitcoin has outperformed gold by over 100,000%?
This is wealth. And everybody that has serious money knows it. All the elites of the world know it. The Chinese know it. Why do you think they won't let you export it? The Russians know it.
And I don't want to be 100% in crypto if they crash the internet.
But does that mean it's the better investment? Let's take a deep dive into the pros and cons of investing in Bitcoin versus gold and see how they stack up against each other. Bitcoin and gold are two very different assets, each with their own unique characteristics. Gold has been a reliable store of value for thousands of years, while Bitcoin is a relatively new digital currency that's gaining popularity. So which one should you invest in? The answer depends on your investment goals and risk tolerance. In this video, we'll compare the historical performance, volatility, and correlation with the S&P 500 of these two assets. By the end, you'll have a better understanding of which one might be the right choice for your portfolio. Sound good? Awesome. Let's get started. Let's kick things off by diving into the historical performance of these two heavy-hitting assets. Gold has been around for centuries, serving as a reliable store of value and a go-to for investors during times of economic uncertainty. It's like the trusty sidekick that's always there when you need it. In fact, from 1981 to 2005, the price of gold stayed pretty steady, hovering between $250 and $500 per troy ounce. Talk about stability. But then there's Bitcoin, the new kid on the block that's been making some serious waves. Since its debut in 2009, Bitcoin's value has skyrocketed like a rocket ship to the moon. Get this. Early adopters who bought Bitcoin for just a fraction of a cent saw their investments grow to 9 cents per Bitcoin in 2010. Fast forward to April 2021, and Bitcoin's price had soared to a jaw-dropping $61,000, even reaching an all-time high of $69,000 in November of the same year. That's what I call a glow-up. Now, I know what you might be thinking. Okay, but which one has actually given investors better returns? Well, buckle up, because the numbers don't lie. From 2011 to 2021, Bitcoin's cumulative gains reached an astonishing 20 million%. Yes, you read that right. 20 million%. That's like turning a single dollar into a cool $200,000. Pretty mind-blowing, right? Of course, it's not all sunshine and rainbows with Bitcoin. While it's had some incredible highs, it's also experienced some gut-wrenching lows. In 2021 alone, Bitcoin gained 100% from January to November, but then lost a whopping 74% of its value over the next year. It's like a roller coaster ride that never ends. Meanwhile, gold has been the slow and steady tortoise in this race. During the COVID-19 pandemic, when investors were looking for a safe haven, gold prices rose from around $1,300 in early 2019 to nearly $2,100 by mid-2020. It may not have the same flashy gains as Bitcoin, but it's proven itself as a reliable hedge against inflation and economic downturns. So, which one takes the crown in the historical performance category? It's hard to deny Bitcoin's explosive growth and potential for massive returns. However, gold's long-standing reputation as a stable store of value can't be ignored. Ultimately, it comes down to your personal risk tolerance and investment goals. Hold on tight, because we're just getting started. Next up, we'll take a closer look at the volatility and risk associated with these two assets. Bitcoin's wild price swings have been known to keep investors on the edge of their seats, while gold has a reputation for being a bit more predictable. So, how do they really stack up against each other in terms of volatility? You won't want to miss this. Strap in, because we're about to explore the wild world of volatility and risk when it comes to Bitcoin and gold. First, let's define volatility. It's basically how much an asset's price fluctuates over time. And boy, does Bitcoin take the cake in this department. This digital currency is known for its roller coaster-like price swings that can make even the most seasoned investor break out in a sweat. Just take a look at these numbers. From January to November 2021, Bitcoin's value shot up by a jaw-dropping 100%. But what goes up must come down, right? In the following year, From November 2021 to November 2022, Bitcoin's price plummeted by a staggering 74%. That's the kind of volatility that can keep you up at night. On the flip side, gold has a reputation for being the calm, collected one in the room. It's like the wise old sage that's seen it all. Historically, gold prices have been much more stable, with large and rapid price swings being pretty rare. In fact, between 1981 and 2005, the price of gold stayed within a relatively narrow range of $250 to $500 per troy ounce. Talk about playing it safe. So, what's behind Bitcoin's wild price swings? Well, a lot of factors come into play, like media hype, investor sentiment, regulatory actions, good old-fashioned speculation. These elements can create a perfect storm that sends Bitcoin's value soaring or crashing at the drop of a hat. Meanwhile, gold has a track record of holding steady and even increasing in value during times of economic turmoil and market corrections. It's like a trusty lifeboat in a sea of uncertainty. For instance, when the COVID-19 pandemic sent shockwaves through the global economy, gold prices skyrocketed from around $1,300 in early 2019 to nearly $2,100 by mid-2020. Now that's what I call a safe haven. Of course, with great volatility comes great risk. While Bitcoin's potential for sky-high returns is undeniably alluring, its rapid price fluctuations can also lead to significant losses if you're not careful. Back in 2017, Bitcoin's price reached a dizzying high of nearly $20,000, only to come crashing down to less than $4,000 by the end of 2018. Ouch! But here's an interesting tidbit. According to K33 research, Bitcoin's volatility has actually decreased in 2023, reaching levels similar to traditional assets like gold. However, don't get too comfortable just yet. This period of relative stability might be short-lived. Remember, volatility can also mean opportunity for those who know how to navigate the ups and downs. So, to answer the burning question on everyone's mind, how does Bitcoin's volatility stack up against gold's? Well, let's put it this way. Gold's volatility is like a gentle wave lapping at the shore. Bitcoin's is more like a tsunami crashing onto the beach. Duke Professor Campbell Harvey hit the nail on the head when he noted that gold's volatility is comparable to that of the S&P 500, making it a much more stable option than Bitcoin. But hold on tight because we're not done yet. In the next section, we'll take a closer look at how Bitcoin and gold stack up against the tried and true S&P 500. We'll explore the fascinating world of asset correlation and how it can impact your investment strategies. Plus, we'll dive into some intriguing patterns, like gold's inverse relationship with the US dollar, and Bitcoin's growing correlation with both gold and the S&P 500 during times of economic uncertainty. Trust me, you won't want to miss this. All right, let's dive into the fascinating world of asset correlation and how Bitcoin and gold stack up against the almighty S&P 500. The S&P 500 is like the MVP of the stock market, representing 500 of the biggest and baddest publicly traded companies in the US. It's the go-to benchmark for measuring the overall health and performance of the market. Now, when it comes to crafting a winning investment strategy, understanding how different assets play together is crucial. It's like putting together the perfect team. You want players that complement each other and work well under pressure. That's where asset correlation comes in. It's the secret sauce that tells you how two assets move in relation to each other. Let's take a closer look at gold, the OG of safe haven assets. Historically, gold has had an interesting relationship with the US dollar. When the dollar flexes its muscles, gold prices tend to take a hit, and vice versa. It's like a never-ending game of tug-of-war. But here's the kicker. When things get rocky in the stock market and the S&P 500 starts to sweat, gold often shines as a beacon of stability. During the COVID-19 pandemic, when the world was turned upside down, investors flocked to gold like moths to a flame, driving prices to new heights. But what about Bitcoin, the new kid on the block? Believe it or not, Bitcoin's correlation with both gold and the S&P 500 has been growing, especially when the economy hits a rough patch. It's like Bitcoin is trying to prove itself as a serious contender in the financial world. Decrypt notes that Bitcoin, gold, and the S&P 500 are increasingly correlated. During the pandemic, Bitcoin's price started to mirror the movements of its more established counterparts, showcasing its potential as both a speculative asset and a store of value. So, how does Bitcoin's correlation with the S&P 500 compare to gold's? Well, it's a bit of a mixed bag. Gold typically has a negative correlation with the S&P 500, meaning when stocks are down, gold is up. It's like gold is the older, wiser sibling that keeps a level head when things get chaotic. On the other hand, Bitcoin's correlation is more complex and can vary depending on the situation. Sometimes it acts like a risk asset, riding the waves of market sentiment, while other times it serves as a hedge against uncertainty. As Bitcoin becomes more integrated into the broader financial landscape, its increasing correlation with the S&P 500 suggests that it's no longer the lone wolf it once was. It's starting to run with the big dogs and feel the effects of market movements, for better or worse. But don't worry, we're not leaving you hanging. In the next section, we'll tackle the million-dollar question. What factors should you, as a new investor, consider when deciding between Bitcoin and gold? We'll weigh in on historical returns, volatility, liquidity, utility, and regulation. All the juicy details you need to make an informed decision. Plus, we'll dive into the safety of these investments and help you strike the perfect balance between risk and reward based on your unique goals. Stay tuned because you won't want to miss this. So you're ready to take the plunge and decide between Bitcoin and gold as your investment of choice. But hold on. There are a few key factors you need to consider before making that decision. First up, let's talk historical returns. Gold has been around for centuries and has a track record of retaining its value even during times of economic uncertainty. It's like a reliable friend that's always there for you. Bitcoin, on the other hand, is the new kid on the block, with a reputation for meteoric rises and gut-wrenching drops. It's the thrill seeker of the investment world. Next, we've got to talk about volatility. If you're the type who gets nervous when things get a little bumpy, gold might be more your speed. It's known for its stability and doesn't experience the same wild swings as Bitcoin. But if you're willing to ride the roller coaster and potentially score some big gains, Bitcoin could be your ticket to excitement. Liquidity is another factor to keep in mind. If you need to quickly buy or sell your investment, Bitcoin has the upper hand. Transactions can happen within minutes, 24/7. Gold, on the other hand, is a bit slower and subject to more regulatory oversight, making it less liquid. Now, let's talk utility. Gold has a variety of uses beyond just being a shiny investment. It's used in jewelry, electronics, and even as a currency. Bitcoin, while gaining acceptance as a form of payment, is still primarily a digital currency and speculative investment. Regulation is a big one to consider too. Gold is heavily regulated and seen as a secure investment. Bitcoin, with its lack of regulatory oversight, offers more flexibility, but also comes with a higher risk of scams and fraud. Safety is key when it comes to your hard-earned money. Gold has a long history and is physically secure in vaults and safes. Bitcoin's safety relies on the strength of its cryptographic code and your own diligence in managing your digital wallet. As a new investor, it's crucial to balance risk and potential returns based on your unique goals. If you're willing to stomach some volatility for the chance at higher returns, Bitcoin might be your jam. But if stability and a good night's sleep are more your style, gold could be the way to go. Remember, there's no one-size-fits-all answer. It's all about understanding your own risk tolerance and investment objectives. As Duke Professor Campbell Harvey notes, gold's volatility is similar to that of the S&P 500, making it a more stable choice compared to Bitcoin. So, take a deep breath, do your research, and don't be afraid to dip your toes in both pools. By diversifying your portfolio with a mix of Bitcoin, gold, and traditional investments like the S&P 500, you can spread out your risk and potentially maximize your returns. The key is to stay informed, stay level-headed, and stay true to your investment goals. With a little bit of know-how and a lot of determination, you've got this. Folks, we've covered a lot of ground in this ultimate showdown between Bitcoin and gold. We've seen how gold has stood the test of time as a reliable store of value, while Bitcoin has burst onto the scene with its high-tech allure and potential for explosive growth. We've explored their historical performance, volatility, liquidity, utility, and correlation with the almighty S&P 500. But here's the thing, there's no one-size-fits-all answer when it comes to crafting your perfect investment portfolio. It all comes down to your personal risk tolerance and financial goals. If you're a thrill seeker, willing to weather the ups and downs of the market, Bitcoin might be your golden ticket. But if slow and steady is more your speed, gold could be the way to go. The key is to diversify, diversify, diversify. By spreading your investments across a mix of assets like Bitcoin, gold, and traditional players like the S&P 500, you can balance out the risk and potentially maximize your returns. And remember, knowledge is power. Stay informed, keep learning, and don't be afraid to ask questions. So, whether you're Team Bitcoin, Team Gold, or a little bit of both, the most important thing is to stay true to your investment strategy and keep your eye on the prize. With a well-balanced portfolio and a solid understanding of the market, you'll be well on your way to achieving your financial dreams. And if you're hungry for more crypto knowledge, please subscribe to our channel. Upcoming, a video where we talk about the potential impact of the approved Ethereum ETF. It could be the next big thing to shake up the market and spark an altcoin season like never before. Until next time, happy investing.